What's going on, everyone? I'm glad you could join us here today. What a day to wake up to. Hope everyone is doing well. Made sure this morning to check just the mood of you all, and you guys all seem very level. And that's awesome. I really love it. I think that this is great to get together on this Monday. By the way, good morning, good afternoon, good evening, wherever you are in the world. I'm so glad that the mic is on as we get started here this morning. Thanks for all the love, everyone, especially those who are here each and every day to make sure that they're able to lift everyone up. That is the most important here. Really grateful for all the things that we accomplished together. Let's make sure that we have the clarity that we need at this particular important time to move forward, right? By the way, thank you so much. I loved the thumbs down this morning because I was looking at Friday's video and I noticed, look, there's a thumbs down. And the video was so solid. I was like, someone shook. And to see them, could you imagine getting in someone's head so much that they'll get up, they'll do whatever, they'll make sure they're there to go ahead and smash that down on the intro. I love you. It's okay. It's okay. You're gonna get it. And until then, you're in the heart. Lots of love. Listen, Bitcoin, right? Let's take a look at everything that's going on. Let's talk about everything. I had a lot of time to prepare. I feel like, this could either be a 3-hour session or not. We'll see how it goes, all right? I'm just going to make sure that we take our time. And thank you, Sam. Thank you for being a part of this, all of you. Jesse, hope you had the most wonderful weekend ever. Congratulations, my brother. So proud of you. That's beautiful, beautiful, beautiful. Danny, amazing. By the way, I can't even keep up. CTM's work is just so phenomenal, coming from so many different points and angles. It's absolutely ridiculous. Iron sharpens iron. You're seeing it live in real time. All right, let's make sure we have a lot of, our wits about us, first of all. Here's the thing, right? We were last week, I think it might have started on Thursday, but last week we started finding out what's up with Evergrande and making sure that we understood how it could become a market risk. More importantly, we were looking things like at the equity markets. By the way, NASDAQ right now on the lows of the day, down 2.5%. This is unfolding and getting ugly, right? Same thing with the S&P 500. It's interesting to me, and this took out both supports. We'll look at these later at like way later in the session. The DXY, though, is interesting to me that it's giving up its gains and has since gone unchanged. I'm keeping an eye on that. Mostly I'm just watching Bitcoin and I'm making sure that we have, by the way, all right, let's start here. Here's where we're going to start, right? Few things. If you took any repair, including the first one or any one after, you are now stopped out as price has taken out the lowest wick point, right? What does that mean going forward? Now you go to the last high, put the line down. This is the line of repair. As this breaks, this is the next entry. Should you go ahead and be preemptive if we get a line of repair earlier? Why? For what reason, right? Is there a reason to do something like this at this point? Why and for what reason, right? Not yet. Look, if not anytime soon, but if in the coming days something else develops, we'll be on it. This is what we're watching right now. What about further downside risk? By the way, this is a type of liquidity event, taking out all those stop losses. And don't think there weren't a lot of stop losses in that area. There were. Price then spiked up. What happens next? I have no idea. When I'm not on the price of Bitcoin, I mean this whole situation that's developing in China. We'll get into it a little bit, but the truth is that no one really knows what's going on. Everyone could speculate. I remember that last week, right? We pulled up, right? Plan B, and he's like, this is China's Lehman moment, and played it out. The money printer will be massive, and that's going to be good for Bitcoin. If you remember, or this is where you're not focused on this morning, let's just go ahead and make sure that you put on the sunglasses and begin to see the matrix a little bit, right? You have people say, this morning Bitcoin's crashing because of Evergrande. It's a correlated asset. Dollars are the safe haven. Okay. Or the Evergrande situation only strengthens Bitcoin's narrative. People may flee to dollars for now, but they will redeploy when the dust settles. Contingent and default only weaken the fiat narrative. Buy the dip. That's where we need to, nothing is, let's say at this point, and this is a tough one, are the markets crashing? The markets are not crashing, right? Well, That's a tough one. And look, there could be nothing easy about this week. Oh, look at this. This is perfect. I put that over this, right? Did you see yesterday? If you didn't, I tweeted out. I say, hey, listen, right? Because we were watching this situation develop. We didn't know what was going to happen, but we were definitely aware of it. I rewatched Friday's session, right? Do you think the Fed will be hawkish this week? A lot of people worried about the FOMC meeting this week, right? With the current market risk from Evergrande's default contained, expect a dovish FOMC. You see El Eron. I don't know his track record, to be honest, and I don't imagine it's very good, but I don't know it. I couldn't say whether or not he's been getting this right or wrong for the last year and a half or whatnot, but he is saying, hey, listen, even though they should start tapering this $120 billion monthly QE purchases, they're not going to be able to. They're probably going to be a lot more dovish. Let's see. I mean, that's my guess. Let's see what happens. The one thing that I'm going to have to skip. I'm going to have to skip forward just 1 second and get to this part over here, right? This is pretty bad. Did you see that the Fed has liquidated its entire corporate bond portfolio? Did you know that not only Jerome Powell, but other governors had excesses of $1 million investments, between $1 and $3 million investments in the bonds that the Federal Reserve bought during the crisis, including muni bonds? And now all of a sudden they like, oh, well, morally, that's probably not the right thing to do. Let's go ahead and exit those positions, as potentially the system's getting ready here to potentially crash again. Do you think they're going to front run again if that happens? I don't know. Look, from afar, be aware of that, because that's not so cool. All right, let's bring it in and let's focus. Alan out this morning, giving the visualization of where everyone should be focused. And that's on wave one, right? This is where we believe we are in the past 2 cycles, the correction of wave one. We have not come out of the correction yet. We all know that. And I'm going to pop over here really quick. That green line over here, as we break outside the latest trend line repair, that signifies the confirmation that wave two has begun. This is the beginning of wave two. Once we break above there, we're in correction, right? Since trading off of there, we've been in correction, right? And, where the low is in, whether or not the low is in now or we go lower, I have no idea, but we need to talk about some things. And that's like important levels where you would change your position and you would make sure that you are protected. What I mean by that is this could potentially continue to develop and get really unruly really quickly. What would you do? Are you waiting, by the way, for price to come down and test the most important trend line in crypto, right? If you're looking at this on this linear chart over here. Now, let me be clear from the very beginning for everyone here. I do not think that the most important trend line in crypto is going to be tested and or break. Now, I could be completely wrong about that, right? And if I'm wrong about that, then that means that good chance, like a really strong chance, that we have not seen the yearly low yet, right? And look, these things, you've seen it happen recently back in March 2020 when the markets start crashing, right? They really crash and things unravel quickly. So we want to make sure while the markets are not crashing in this moment, that we're prepared across all markets to understand how we need to position if something like that were to begin to unfold. I think, though, however, why I don't think that we're going to be trading down to touch the most important trend line in crypto, I don't think that you could wait until a touch or a retest to go ahead and tidy up your positions. You all know, or most of you, by the latest right over here in this area, when I took one of two finally entries, that happens to be somewhere around 39,500, right? Now, I'm not waiting for a test over here to say, okay, something's wrong and I need to reposition myself. I was looking at this, by the way, on a log chart, lining up different. I don't want to get into this chart over here. By the way, if you saw the post that I put out on Twitter last night, it was really late. And I put out a post saying, hey, listen, here's what a $480,000 price target, a bullish view of Bitcoin would look like. Listen, the truth is it might be off and I might be underestimating. I'm not going to get into any of that right now, right? At all. But Brad is gonna go ahead and actually get into it, and then we'll build off that. But if you follow on a log chart and you're looking at this trend line, the most important trend line in crypto, happens to show a confluence in that area around 38,000. 38,000. I think if price came below 38,000, $37,000, I think that at that point I'm making sure to at the very least or at most be only in spot Bitcoin. That's what I want to be very clear about that. Sorry about that. I don't want to be trading with any leverage. Price breaks $37,000, the latest. Now, I'm giving you this as a sounding board to go ahead to figure out what levels you want to use, where you know that you're wrong ahead of time, so you could go ahead and make sure you position out. To be honest, if I was approaching now the break even of this entry, I'm not going. I'm after this live stream. I haven't done it yet. I'm going to go ahead and move those stops. I'm not going to take a full stop loss anymore on that. Not after the price action we've seen, but I'll make sure that I'm protected. I could always just get in after the repair. That's the beauty of it, and that's why there's no rush right now, right? As soon as we break this line of repair, all of us will say, all right, well, that's the next opportunity. Wherever the lowest wick point is, that will be the place to manage the risk off. And we're front running the next move into the beginning or the confirmation of wave 2, right? I'm still holding positions from down over here, the break above the most important trend line in crypto. I don't know what's going to happen, right? When I say I don't know what's going to happen, I mean, I don't know whether or not this whole thing actually is contained and will be contained with inside China. I think that, well, anyway, we'll when I show some graphs, we'll talk a little bit more about that. I want to make sure that a black swan entering the market, which this is, that I'm prepared in advance, or where I could say, hey, listen, things are no longer playing out as I expected they would play out, regardless of the reason. We have seen what past crises have led to, and it's, a massive, massive dump on Bitcoin, followed by a massive reaction once they come to the rescue. Anyway, I want everyone to have the clarity of where we are right now. And by that, I mean, I do believe that once we break the peak of wave 1, that might be the lowest price point that we see for the rest into cycle peak. There's a really strong and good chance of that. Right now, we are in correction of wave 1. We don't know when that ends. The confirmation of it ending is when we break this trend line of repair. Absolutely nothing has changed, right? We are, and that's always is how it is here. We're always ahead. We always understand where we are. And I want everyone, I don't really know what's going on out there. I mean, like in people's minds. I will find out later. Last night, though, I have to say that I stayed up late and I was up. I knew something's different. I knew something's wrong. I wanted to make sure I had a grasp of it. We're not often in that situation. And, I guess everyone feels it. All right, let's move forward a little and then we'll come back. If there's any questions about where we are right now, right? By the way, a couple of things I want to share, right? Between $37,000, right? Between $37,000 and what would be the test of the most important trend line in crypto on a linear, that's probably about another 15% drop, right? And odds are, if you drop below there, right? I mean, listen, I don't know if a test would hold if we're seeing some type of disorderly unfolding of correlated risk. At that point, if price is coming all the way down there, most important trend line is right near the yearly low. I mean, if that breaks, that could be nasty. And listen, if it happens, I think looking back, it's going to be like, okay, that was a massive opportunity. The thing is, you can't take advantage of a massive opportunity if you're stuck into a position you shouldn't be. At that point, I'm not selling my spot. I'm not selling my spot to the top. You all know that. But I would make sure that you are using no leverage whatsoever. We'll walk through it together and we'll make sure at the first opportunity to take a trade that we're there. Right now, in my opinion, it's this trend line over here. And that's a nice bit of space, by the way, coming into the resistance of what will be the final repair, the start of wave 2. All right. So, Tom, I'm cloudy about this. National holiday in China tomorrow. Oh, interesting. Yeah. So I was confused of whether or not just the bonds were trading today. They're planned default on them tomorrow, but tomorrow is a national holiday in China, so there will be no. I'm not up to speed on that at all, and I will get the details later. Thanks for pointing that out. Very important. Rustin, that we love them. That's okay. Could you imagine? That's beautiful. They did it during the intro. You know that whenever I see that thumbs down going forward, that right there, because it's just gonna be like a big heart for me. That's all I see is a big heart. Lots of love. All right. So I know I'm confused, FA, on the details. I sincerely am confused on the details, and I've read up on them a lot. So I'm not going to tell you if I don't know anything. I'm not gonna tell you anything. All right, so let's keep going. Alan Au giving us the beautiful awareness. By the way, Brad, I can't wait to get on and record with you this week because all I'm doing is going through your model. And I have lots of questions. I can't wait for your clarity. That's something that I'm really, really, really looking forward to. All right, let's go. Jesse, coming off the big weekend this morning, pointing out the chart that he prepared this chart back in when? A while ago. It was the first time we started seeing variations of it, pointing down the possible wick down towards 38,500. I like that because that confirms, by the way, a look at this trend line over here on the log scale. 38,500, showing the most important trend line in crypto and the channel support over there. It's a big level. If we lose that, something is wrong. And that's the beauty of having a model where you know something's wrong. And right there, it could be very important if it unfolds like that. All right. What else? I'm not going to get into this. Everyone already knows that we saw El Salvador add another 115 coins this morning. But this I just need to drop by you. This is kind of important. If you've been following, we know the SEC had opened up some type of threat against Coinbase and their lending program. Coinbase has backed down from that. Coinbase will not be launching that lending program as a response, right? Let me share this link with you because I think it's one that you want to bookmark to read in later. That's a pretty big deal that they're backing down. They are launching, by the way, their institutional product. However, what's important over here is basically what they're saying, whether or not it's true or not. I think it makes a lot of sense is that what we're looking at coming the rest of this year is a lot of financial regulation around the world, right? And those that are involved in crypto going forward are going to need to have bank licenses as well. I don't know what that means for things like BlockFi and Celsius. We'll have to keep I guess from afar, but a close eye on what develops in the space. Right now, I think that there are bigger things going on that people need to worry about, such as like this over here. And you're looking at the nation of China, their sovereign risk over here this morning going through the roof. This could get ugly and disorderly, or at what point in time, right? Is he going to say, all right, well, we need to do something. Listen, I have to say my gut, I'm not really worried about the outcome of these events. I'm not at all. However, I'm being overly cautious just to make sure at such a pivotal point that I stay on the right side. So there you are. I'm monitoring things. I believe that this is going to, by the end of the week, work itself out. I think that the Fed is going to be overly dovish, right? We have gotten that right since June when the market was looking for that taper and talk of taper. Does this give the Fed cover to potentially push out the talk of taper? Might they now say, no, maybe now we should do this at the beginning of 2022? Either which way, I think it's going to be dovish. As I said, CTM continues firing from all cylinders. Michael provided some beautiful work over here and some visuals about the continued pace of expansion of the Fed's balance sheet, what that's going to look like going forward. Michael, I haven't even had the opportunity because this was done on Friday over the weekend to get into this as much as I want. I want to bring this up and I have it up here on a tab. Ian has been showing us the balance sheet and we're talking about Raul has been very, very on point as well about what the further or the next step is going to be. And we all know that they're not looking to taper. We're all looking for that next big whammy. I will come back to this and spend a lot of time with this. There's a PDF over here of this tweet you can access over there. Let me just go ahead and make sure everyone has this one. I don't think it got enough views or the love and respect, but I think it got in front of the right people. It really got in front of the right people, and that says a lot. Listen, right? From early on, remember, like, this chart should be very familiar to all of you because over the last couple of weeks, we have consulted it like a few times on CTM, right? And this morning over here, Sanjit again is saying, hey, listen, obviously I appreciate the work, which is why from the very beginning, we've been looking at this and watching. And then you could see over here, Jesse and everyone else was picking up wave 5 over here. I believe the count is 4 here, 5 here, or maybe this is 4 over there. But Jesse was all over that, as was Miles all over that these past few days, showing what the potential risk to the downside was. I know that everyone else here is has been aware of that. Sanjit now showing this fractal is pretty solid. Look in yellow, the price action, right? How it lines up exactly. And then what we're currently seeing right now. By the way, if this does trigger over here, right? If the break of the box to the upside does trigger, what you're looking at is the peak of wave 1 being taken out. And I've said to you in the past 2 cycles, when the peak of wave 1 is taken out, that is the lowest price point up into cycle peak, right? So be aware that's just viewing what we're looking at from a different vantage point. And it's really important to get many different vantage points in order to get the clearest picture possible. What else? Let's keep going. I was looking at the tweet over there. Sorry about that. So good question over here. I'm gonna have to go ahead and make sure I clip this section of the stream. We're at minute 27, so I could reply to Van Day Trader and show him with a breakdown of the S&P 500. How much will this affect the end of the crypto bull cycle? Are we still potentially, most probably, I should say, looking at the peak of the market being in December? And 100%. At this point in time, I'm not looking to make any type of adjustments whatsoever. Everything is more than on time. By the way, I mean, this is almost ridiculous. When you look at the next print over here, and you're going to see the CTM meta model accounting for this deviation that's occurring today. I mean, that's got to be coincidence because it can't account for a black swan event as we're seeing occurring in the markets right now. And it is a black swan event, right? I mean, more or less, since 2017, Zero Hedge has been talking about this current situation and what the inevitability of it was going to be, which is occurring now. But this is how it lines up with the model. That's just coincidence, but it's a funny coincidence nevertheless. Without the event that happened itself, right? We were talking about all last week, hey, the CTM meta model does account for some potential downside volatility. Be aware, and I think you guys have to tell me, did everyone have the clarity they needed going into this past weekend and this morning, right? Is anyone emotional whatsoever? And if you are, that's fine. Let me know. But I would like to kind of understand where everyone's at. So if you get the opportunity, whether you're watching this on the replay and you have the moment to write a comment, let me know what's going on. How are you feeling? I want to make sure that I have a full grasp of CT because I'm worried about the top. I'm worried about the top of the bull cycle. I think that a check of your emotions today is a good test when things are getting emotional to the upside are going to be like. If you find that you're emotional today, you're going to be playing from a position of handicap comes toward the cycle peak. So being aware of that, I think will help you get grounded and prepared because it's coming soon. That's good. That's what. So I guess there are people out there losing their mind. All right. So just let's look at it from all different angles. Here's another one that we need to look at. And, so we're going to see a spike down, right, by the close today. Unless this thing wicks up even today, I have no idea what's going to happen. I'm very clear about that. All as I know is that when we get this next line of repair out, that's the next opportunity to take a trade if you're interested. It's an aggressive trade, but it will be the most probable bottom of wave two, right? And that's what it was prior to these trades getting stopped out. Whether or not you took the first repair or any other repair after, it was the most probable bottom of wave two. That's where wave two is confirmed. There's another opportunity approaching as we get to it. If between now and then we have further downside or much further downside, I don't know. But if things continue to get like, people are a little spicy out there, whether or not, by the way, the market by tomorrow will kind of be waiting on the Fed or not, that remains to be seen also, right? There's a good chance that the market will just kind of be like, wait, let's see what the Fed does on Wednesday. And anyway, we're watching. Let me come back over here. Look, right now everything continues to be on time, meaning that we want to see wave one, right? And we're aware, or everyone has made you aware, that look, in 35 to 40% drawdown would be well within range to previous cycles. I don't think we see that, and even with what's going on, I maintain that. I think because of the 2 month bottom we saw, and remember I told you before we actually bottomed out right around here, days before, I think people capitulated mentally. This shakeout was rather brutal and a lot harder than a quick down spike and then up. That's almost easier, especially like many Bitcoiners are only holding spot, right? It's not a big deal, especially within a day, you see like excessive volatility on Bitcoin. By then, that shakes out like the momentum and the price spikes up. It's a lot easier than what people experienced during this 2 month grueling grind. And I think that on the way up over into the cycle peak, I think that this mirrors a lot more that we saw in the beginning of the cycle, where we saw increased volatility over the previous cycle, but it was to the upside. It wasn't until we got to the mid-cycle shakeout that we saw the volatility become an average on the downside as well. But we were seeing limited drawdowns on the upside. That's what I continue to believe is going to happen, even with the pressure that we're seeing. And of course, you all know that I do not have a crystal ball and I cannot predict the future. And I'm telling you and giving you the reason why below this area over here, below a breakdown over here, I'm getting out. Like I'm at that point, I'm just holding spot and I'm neutral. And regardless of what happens, I will be in a position of power, right? And that's where I want each of you to be. That's the importance of today's session, of having that, just as always, the clarity and calmness to be able to make the right decisions at the right time. It's always, this so far is very orderly. We're just seeing so far, what is this, like a 23% correction? Is it a 23%? Let me just get an idea of what we're seeing from the peak of wave one, right? 20%. Now there are some people, CTM strong, who were saying, well, that's not enough. And they're looking for a 30 to 40% correction. That could all happen, right? Be prepared. All right, let's keep going. Right? So what I'm getting at is over here, if we do break down though, if we do see something unfold, that's a game changer, taking out the most important trend line in crypto into the downside. At that point, our awareness into cycle peak has massively shifted. We will figure out as soon as we can what our expectations are going forward. At the end of the day, I think all of this holds. If you did see the most important trend line in crypto, we have areas to lean into and wait for that repair out and to make sure. That would be a gift like March 2020. What I mean by that is I did not expect to be able to add so heavily off of this move that occurred, boom, right over here. This was around 4,000, between 4,200 and 4,800, a huge place to lever in hard. I didn't expect that. If that happens again, I'm going to make sure that I get neutral and then I'm able to go ahead and lean in hard when it matters most. Let's keep going. Right? So no one knows, by the way, no one knows what's going on or how this is going to unfold. And the question I think should be like, how do we know when the markets are crashing? How do we, right? So right now, December is 100% the base case for the market cycle to peak. Everything on this chart over here on the CTM meta model, everything over here, this is CTM meta model showed in a different way, whether or not we're lining them up for mid-cycle low, all of that is 100% still on time, or in my base case, like with the greatest clarity. There's other ways of looking at it. You saw over here. Hold on one second. I want to show you visually. I love visuals. Tech Dev showing, listen, from the time of the test of the golden fib, the 1.618, there's been 147 days into cycle peak. I mean, this is CTM strong, right? And this is where but just seeing it in different ways is also very important. There's no other way for us to guess when the cycle peak would be, but then consulting being what happened in past cycles, this is the best guesstimate of what we have going forward. You saw this morning that Alan was just giving the visual as well with the blue arrow in the previous 2 cycles where we are at the end of wave 1, looking for wave 2 into liftoff and cycle peak. That remains the same. And the only thing that would change that for us would be breaking the most important trend line in crypto. Instead of putting in a higher low, putting in a lower low, and then we would say, wait, the model is completely wrong. And then we have to go ahead and just rely on pure TA until we have our surroundings, right? That's the beauty of it. But right now, everything is 100% on time, even with what's developing. This could all actually lead to, hey, listen, there's some funny things going on out there. It's a little weird that the Fed governors happen to square up their positions right ahead of this event. Is it possible that there's much more pain before there's some type of reaction? As a Bitcoiner game playing this out, you understand, as we did last week off of Plan B's tweet saying, listen, if this is a crisis, if this becomes a big deal that spreads, the only reaction could only be more printing of fiat. And it won't come from will it come just from China? Will it come from China? We already have the Europeans, the ECB, and the Americans, the Federal Reserve, printing like crazy. Michael's showing us clearly and really help outlining what that's going to look like just going ahead in the next year. Remember, the Fed alone is $1.4 trillion expansion of their balance sheet. When they talk about taper, they're talking about tapering maybe 10% of those purchases. They can't even do that yet. And I think that this week we're going to see a more dovish Fed. At the same time, do not be comfortable. Now is not the time to be comfortable at all. Why the markets in this moment are not crashing, right? By the way, we talked about last week and showing you in September the price action over here and the wicks, right? Was it on the 8-hour that we saw those wicks better? Right? Remember I was showing you all the wicks, right? Is it possible that we have that type of price action again in a wicks? I don't know. But I do know once we break that trend line, at that point, we're back on. Right now, everyone's back off, right? And it's good. And it feels good to be able to sit from a vantage point where you have absolute control. You know how to manage your risk. You know when to put it on. You know when to take it off. You do not know what's going to happen. You cannot predict the future per se, right? The Bitcoin modeling has proven to help us, give us the opportunity, obviously, to be in an enormous position of power. I digress. I want to play over here a second. This, by the way, is just also really neat. We're talking about different vantage points. This is, if you remember what we did with Benjamin and here on the channel before that, showing where we believe the next bear market low will be and why. This is just another way of visualizing it, and it's happened each and every time. By the way, if that is to occur, and we're looking at a Bitcoin bottom of around 6,000, 60,000, 64,000, right? What does that mean for the potential price top of Bitcoin? Somewhere around $420,000. I mean, hey, it is what it is, right? Whether or not, I mean, it's always different this time. These things obviously rhyme, but we got to pay attention. And if you're building off of if this is the bear market low, right? And you could just do an 85% drawdown, that would be 420,000, right? Does that mean that we're predicting Bitcoin's going to be at a price target of 420,000? No, we're just looking for ideas and references because a lot of people, by the way, how about this work over here? Big shout out again to Brad, protecting a lot of people, making sure you all understood all of last week, this yellow trend line, the confluence of support over here with the white one. Well, I tweeted it out also as price came in for the test. That was a huge advantage for helping people manage their risk. And that's CTM strong. Let me play some tunes here for 1 second, just so I could go ahead and catch up with y'all and read some comments. So I'm gonna go with, let's see, I'm gonna go with some honeymoon vocals for a moment. All right. All right. Gonna need that little bit of rest over here. Some comments I highlighted though that I want to talk about. Starting over here, I'm low key emotional today. I'm wondering to set a stop loss on some part of my spot, Bitcoin or alts, right? And JWC also building off of that, saying I don't want to sit even in spot, as I could have doubled my position had I not written the shakeout. Listen, you have to deploy multiple strategies, and they depend a lot upon when your entry was and what jurisdiction you're in. If you own spot Bitcoin and you're looking to pay capital gains on it, you do not want to exit mid-cycle, right? Unless there truly is, that's in May, unless you believe that Bitcoin price peak in 2022 is going to be again in May or into June. I don't, again, it depends on what your strategy is and what you're doing. For most people, what makes sense is actually buying the dip mid-cycle, right? Not selling their Bitcoin and buying it back. If there's only a 53%, by the way, drawdown, how much of that 53% drawdown do you think you're going to get selling your spot? You're not selling the top, right? You can't sell, by the way. The earliest you could have sold was 62,500. Most people probably would have got like 58,500. And if you were able to get that, I kind of think that if you were selling your Bitcoin mid-cycle, that probably as Bitcoin was hitting 30,000, as most participants in the market out there were like really way bearish. That's where they all became bearish. They were looking for much lower lows. I mean, when did you buy back Bitcoin? You probably bought it back, right? After the massive move out of the descending triangle. And then, was it worth it? No, it's not worth it. At least from my perspective, you don't want to sell Bitcoin during the bull market and try to time that type of drawdown. I think that having those ideas in your head, I mean, really work them through and make sure you're clear on what you're thinking and why, because it can make you, it could lead to some poor decisions going forward, in my opinion, right? And this is good, right? Emotion, but not really, but cautious. That's how I am, Matt. I am totally like 100% at this moment, confident in my thesis. At the same time, hey, this could develop into something bigger. We don't know what's going to unfold. Let's make sure that we are cautious, right? And yes, by the way, if your entry was at 10K, obviously you're in a huge position of power. If it was 52K or 64K, if you're entering Bitcoin at $50,000, I really think that you have the mindset, again, the same mindset that when I put half my net worth in at $9,000 on average, that it was, hey, listen, I could lose all of this. That's the bet you're making. So if you bought Bitcoin at $60,000 and Bitcoin today is $45,000, I mean, are you sweating that, or did you understand your risk going in and what your risk was for that particular investment and time frame? Listen, we bring it back to the markets are not crashing, and listen, eventually they're going to crash again, right? So we want to make sure that we're able to get it. We had the awareness, and we were strong on the awareness of what a breakdown would look like on the trend line here on the NASDAQ. That has absolutely triggered. That was the line of repair, right? And that will still be a confirmation. I think we're going to get a lower one in at a sharper angle in the days ahead or weeks ahead. That's not happening right now. Same thing on the S&P 500. We were very strong on the awareness of what occurred, including over here. This was on Friday on our live stream. I pointed out that price was right here consolidating. And if we resume down, taking out that low for the resumption off, right? We were looking at into that next bit of support. We blew through that like butter, and the next one as well like butter, right? And this is looking pretty bad right now. Will it turn around by the end of the week or be much worse? Either one of those things are going to happen. This could if the Fed comes out, by the way, and they were hawkish, the markets are going to sell off like crazy. There's no question about that. We're going to see that familiar pattern that we see in September, October of the markets. But at this point, I don't know, and again, that's why I'm just focused on Bitcoin. I'm focused on where something is really not right. At that point, we break this area. If we break on the log chart, the most important trend line in crypto, as well as that channel over here, at that point, reassess, make sure you are neutral, right? Make sure you are neutral so that you could be from a position of power going forward. Because if that unraveled, right, the repair, that would be the biggest gift. There would be the model breaking again. The model broke before. The model's broken a couple of times. It broke, in that first wave in 2013. It broke again during the COVID crisis in this area. Those are opportunities to go ahead and lean in. You can't do that if you're holding a position you're hoping doesn't get liquidated. That's not how you do it. I want to make sure everyone has it right. There was a question about how much margin to use. Let me just go ahead and make sure I check that. I don't have any thoughts on the ETF, by the way, whether or not that's going to be approved or denied. I am used to, where I remember 4 years ago waiting for an ETF approval and then, at the last minute, they deny these applications. And it's almost like, I don't even care, when it happens. By the way, I don't even know if it's good for Bitcoin to have an ETF. I really don't think it is. But that it doesn't matter what I think is good for Bitcoin. The launch of an ETF would allow for a massive inflow of money into the space. There's no question about that. Whether or not it happens now or later, that's like Bitcoin's still going to do Bitcoin things, and I'm not worried about what happens with the ETF so much as what continues to happen and unfold on price. Right? There was one question. Interested to hear your thoughts on if we have issues with the internet globally and the potential effects on a Bitcoin position. Yeah, I mean, Dave, that's something we've talked about for a long time, ever since those diabolical people from the World Economic Forum simulated what a what the internet going down would look like and how that would affect supply chains, meaning how they could grab more power. Then we looked at when the U.S. military did the exercise that the internet went down in the United States for 2 weeks, shortly thereafterwards. So we say, hey, listen, these guys are always telegraphing what they're doing and what they're working on. Is it a real possibility that the internet goes down for a period of time? Well, yeah. I mean, and they have a kill switch in the US, by the way, right? So for sure, the internet could go down. If the internet goes down, does that kill Bitcoin? Absolutely not. Could that send Bitcoin down towards zero? It could, for sure. That's why, but it's not just me. We have an army. It's not, what's bigger than an army, right? We have a massive, massive army of hodlers of last resort who are not selling their Bitcoin. Listen, we just held a year and a half ago Bitcoin down to 3,800 off a crisis, off a liquidity crisis, and we did not sell. There is no way we're selling our Bitcoin, right? So what happens as soon as the internet goes back on and the nodes repopulate? You can't stop Bitcoin, and it would only be something that's temporary, right? Now, if you could know in advance that the internet was going down and you could position out of your spot, and then magically at the time the internet goes back on, be able, yeah, listen, I'm holding, right? And that's, yes, Dave, that's a risk to Bitcoin. It's a real risk, something we've talked about, but it's not something that could kill Bitcoin. By the way, we did look at some things that were potentially a real threat to Bitcoin. It was Kathleen along talking about Real Vision at the crypto gathering, how that there are only a couple of on-ramps, off-ramps from the banking system into Bitcoin. Those could be taken out. You see people like Jack, right? Jack is a funny person who seemingly is promoting 2030, the Great Reset. At the same time, he's also working on Blue Sky, a decentralized Twitter that would be running on Bitcoin and on the Lightning Network. Listen, I don't know. It's all very complicated. I don't know, Dave. I think it's a real possibility it could happen. The wave to infinity could happen. Could this be the last cycle? Only up in 2022. Could happen. I don't know. We'll make sure that we get it right, though. Yeah, very important day. It's a very important day. I'm glad to be here, cool-headed with all of you. September is historically a bad month for Bitcoin, right? We looked at that also, right? October, November, historically really good months for Bitcoin, especially during the bull market phases. Are we going to see more of that? That remains our base case, right? By the way, here's something that I thought last night. One of the first things I thought, if we get through this scare, and it's only a scare, right? And we get through this period over here, and as soon as we get the confirmation that wave 2 has begun, do you understand that Bitcoin just shook off like a huge obstacle? At that point, it really seems like only up to me. We're getting close. Let's make sure we get it right. I think a lot of people I would like to look at later to see the amount of leverage traders liquidated on the long side, whether or not everyone who's short here is able to take some profits, or whether or not they wind up getting liquidated on the long side. We'll soon find out. I don't think that this move was caused by leverage per se, or that there was an over excess of leverage that caused this move. I think this is an appropriate move for what's going on today in the financial markets, seeing the NASDAQ down almost 3%, S&P down 2%. To see Bitcoin down 7%, that seems really normal to me. What's weird is the dollar giving up its gains, going unchained on the day. I don't really have a read on that. That might be that we're waiting for what happens on Wednesday with the FOMC, and that's it. I mean, do we have the clarity that we should have coming out of today's session? That's what's most important to me. There it is, Fabio. Nothing has changed. In 3 words, Fabio just did what took us 54 minutes to say, and nothing has changed. And that's the truth. Now, it could change. We want to be aware of where things are wrong. That's the beauty of having the model, right? By the way, if you exit, over here, somewhere between 37, somewhere around $37,000, confirm that we've lost all sorts of supports. Does that mean that the most important trend line in crypto on a linear scale won't hold? No, it doesn't mean that at all. At that point, though, something's not right. I want to make sure at the earliest opportunity, I want to give the trade room because this is all normal, right? But at the same time, if something goes wrong, I want to make sure that I'm protected. That could be like, yeah, that's a big deal. It's another potentially like 19% drop. That's just going into the low. I think if we break if we test the most important trend line in crypto down here, there's a strong chance that we break it and things could get rather ugly. I don't think any of that is happening. I want to be very clear about that. A lot of people look at the Wyckoff distribution that occurred earlier and they talk about the 50% drawdown. And then if they're going to go ahead and line up a 50% drawdown from over here, that doesn't really add up for myself in that, look, this is much more volatile. Look at the size of these moves are much bigger. They're much bigger than over here. This is much more subdued. So yeah, even if this plays out, we're looking at more of a subdued move, in my opinion. All right. I hope I did everyone well in that they have, someone remove the other down like. Why? Come on, man. If you're going to punch the down like, leave it up there. It's all good. Could Bitcoin trade without the internet? It's possible. It's been, was it Bitcoin? Yeah. I'm trying to think. I'm trying to think. If someone goes to crypto news, crypto with a zero news, and they do satellite Bitcoin transaction, or someone searches Bitcoin satellite transaction, I think it was. I think it's done. I think it was done. I think it was done by the guy who was there running a node at the very beginning, right next to Satoshi and Hal Finney. He has the IP addresses that Satoshi was using. He was very adamant and clear that the fake Satoshi was not Satoshi. He had this proof. I think it could be done. But listen, Bitcoin needs the internet. We're not all going to be sending Bitcoin transactions over satellite radios or anything like that. Bitcoin needs the internet. Thank you, Michael. I mean, yes, also. I mean, I also remember, yes, Michael, that was my thought too. I also remember back in 2020, late February into early March, and you're seeing like the NASDAQ and the S&P going down like 3 and 5% a day. That 7% a day on Bitcoin would add up quickly in just a few of them. So yeah, but I agree, nothing disorderly happening at all for Bitcoin. This is a normal move, right? This is not a big deal. Down, 7% on the session, and I like that, these stops were taken out in that area. So, all right, fam. I think we got it, Again, until tomorrow, we get to do it again. I hope you're all well. Any questions that we want to go over? I want to play some music just in case anyone has any questions where they're not walking away with clarity that we want to cover. We'll go over that for sure. Because I'm never in a rush to get away. I enjoy all the time that we spend here. But let me play some music just to make sure there are no follow-up things that we want to cover together. I mean, what's interesting about that is, Satoshi made mistakes also, right? Satoshi made some mistakes. I mean, the guy was absolutely brilliant in his operational security, how he's been able to keep anonymous all this time. By the way, if Satoshi was one person, who knows if they're even alive today? But, there are some things, there are some pull requests where Satoshi did miss certain things. Whether or not this was like, I don't know, anything's possible. It is possible that, this is that's all possible, Bradley. I don't lean in that direction, but it's possible. That's bullish. That's bullish sign for the markets, I think. No. There's no way I'm not exiting my spot, Bitcoin, at all, at any point during the bull market. We are in the bull market phase. The bear, in my opinion, has not begun. If the bear market begun and the top was 64,000 on Bitcoin, that would be very different. To see shorter cycles with extraordinarily diminishing returns would be really different. It's something that I'm not prepared for. I'm not selling my Bitcoin. I would continue riding that out, understanding the bullish case for Bitcoin. Let's look at FX for a little bit over here. This is the Euro US dollar. Interesting that this is coming into an area of support. The reason I say that is because we're looking at the DXY giving up its earlier gains today. Let's see. When I look at this, Dean, the first thing that I notice is that while the equity markets are a little bit nervous, why definitely the crypto markets are off, we're not seeing too much going on in FX. We're really not. These are almost like, kind of normal moves on FX. Now they've been subdued for quite a while, right? But nothing crazy going on over here. Let's start with the Australian dollar, Japanese yen. All right, a couple of things, right? As soon as we started going into correction, right, we were able to cover that. This is great because we haven't looked in this in so long. So as soon as we started going into correction, we covered it. Then the last time we looked off, I had this peak over here. That continues out, right? Do you think that we can now very cleanly move it like that, right? That's the sweet line of repair. All right, this one I could get off. What about this line? This is still, we're in correction at the same time. It doesn't look that bad, right? And not only that, as soon as we went into correction, we were very quick on that. What I've been looking for and was talking about, and this is going back now, probably 5 weeks or longer, when we were doing FX sessions, and I was talking about what I think is going to happen at the end result of this correction is I think that the Fed is wrong. I think, or not that they're wrong, I think they're always right. I think they're very good at what they do and how they do it. I think that the Fed was verbally intervening in the market by talking about the taper, right? And I think that we're going to see an extension, but until that extension occurs, we don't know. We know once this thing triggers, this could just be halfway. That's my case. I maintain it. I think that's what is happening over here. As far as the cycle of the Fed, I think we're just halfway through. A lot of people talking about the possibility of recession coming. I don't know. It's a hard one for me. We went what did we go 11 years without a recession, and then the recession lasted 6 hours, right? The system is different. What's different is that the Fed and central banks around the world are just monetizing debt. Where MMT is not a theory. It's a theory, but it's being, it's happening in real time. Does that change things? I think so. I don't know. I did see though, and Dean, this is what I want to leave off with this. I saw Caleb in the mechanical Forex section, the channel this morning, sharing some information using the MACD though, but with the trend lines we use here, and he's been back testing it. I think anyone who's interested in focusing in should be working with him, working with Greg and everything they started focusing in on, mechanical CTM. Lots of good stuff happening over there. It's just like what we do or what I teach on Bitcoin in slow motion. It's just in slow motion, and that's what it is. It's the same. It's when you look at the chart of gold, right? Tech Dev pointed this one out. The chart of gold from a $1.2 trillion market to a $5 trillion market, playing out. It took a lot longer than we expect that's going to happen on Bitcoin. So, let me continue with this music. Me too. Me too. Thank you, JWC. All right. I just needed to get some rest of the voice over here. Could the China issue shorten the cycle? Core reality, I think that if we see the China situation develop into something that provides any type of systematic risk, that the only response could be whether or not it's from China and primarily China and or from the Federal Reserve is just more stimulus, more printing of the fiat, right? We saw 38% of all dollars in existence printed in the last year and a half. Was that a one-off and done? Is inflation transitory? Listen, Dean, I'll come back to that in 1 second. But there was something I wanted to share with you, and it's really important as well. And it's this concept of that where we are right now. Right, here we go. I see this come up a lot, that there are a lot of people looking around and they think that the most similar period that we're in is in the roaring 20s. Now that's prior to the Great Depression, by the way, right? Obviously we're moving towards a massive event. Hey, do you think it's easier to move into a new system? Do you think it's easier to implement a reset during a depression, right? Well, yeah, for sure. People are going to be desperate, Anyway, I don't know why, but I want to make sure that we focus in on that because this seems to be the period that we're in. I think that right now, until we get to whatever reset happens, the name of the game is to keep the music playing as long as possible. They are doing that by continuing to devalue fiat down to nothing, right? And do I think that shortens the cycle? No, I think that could have the potential to make this cycle more powerful than currently expected. I do. I think that's what could happen over here. Now, when we look at potential or probabilities of what's occurring on Bitcoin, this is my favorite model to use. This is where I believe that we end up. Now, it is possible that we wind up, overshooting this by a large margin. We have people like Miles showing us beautiful models. We have Brad getting ready to present, and we want to make sure if that's occurring, we have the awareness we need. Could you imagine in just a few months, Bitcoin is trading above, $250,000 and you're seeing like $10,000 and $30,000 price moves occurring on Bitcoin? The FOMO is going to be absolutely extraordinary. If Bitcoin broke $350,000, the red trend line over there, we want to, a lot of people are going to be like, Bitcoin's going to $1 million. This time is different. Super cycle. Last cycle, it was really, I forget who brought it up. It was Tech Dev who brought up. Listen, I think that a lot of people who are espousing those positions are doing that as a liquidity grab. They want to be able to exit their positions. I said, I hope that's evil if that's the case. I hope that's not the case. I stand for giving out what I believe to be the most accurate model as possible. I believe you're looking at it right over here. If at any point that changes, we will adjust and adjust accordingly. The whole idea is to be as early and as accurate as possible. Whew. Beth, thank you so much. Al, Tino. Yeah, Trish, it's important that we have, and working together to understand as things are unfolding over here, that we have that awareness about us. I want to look at some charts really quick. So if anyone is sticking around, I just want to take a look at FX and make sure I get my bearings. So anyone else, have a beautiful, beautiful day. I will see you tomorrow. I look forward to it. Thanks for spending the time here together. But let me just go ahead and I'm going to start with the US dollar, Japanese yen. And so I'm noticing, right, waiting and in correction. All right, so let me keep looking. Let me peek at the US dollar, Mexican peso. That continues nothing. Moving along if nothing's there, right? Pound US dollar. So that's a tricky one. That's a tricky one over there, right? I'm going to go ahead. I'm going to remove this now. That trade, by the way, if you took this trade, it's still open. You're waiting for the lowest price point. But because I'm not involved and I'm watching the price at that point, I'm going like this, right? I'm going to be watching, trying to just get a feel for the markets and what's going on. I mean, that looks like that could be potentially disastrous. Anyone watching the pound Japanese yen right now, getting ready potentially to break down from a wedge pattern over here, from a descending triangle pattern over here. That could get nasty. Watch yourself over there. See, Euro US dollar, and this is kind of still neutral. Have the opportunity over here off the support to go ahead and hold over here, breaking down almost on horizontal resistance, breaking back below that trend line. That would obviously set up lots of further pressure. I will just go ahead and I'll move this at that point. This trade is still active because it's not coming back below. I would move it, this trend line over. I just don't see anything worthy that's happening right now. The pound Japanese yen, that's a big obvious pattern. These things, by the way, this will be in hindsight. If all these roll over, right, and take out these, sorry about that. If all these roll over, that could be opening up some potential really, really strong moves to the downside. And, it would make a lot of sense to see that flight to safety into the Japanese yen. What would be the earliest that we're seeing that? How about that? Let's try to figure that out. Well, Jordan, as soon as the correction happened, we were all over that, right? Well, okay. But here now today, what do we do? Right? That's what I'm more interested in. When, I don't know. I think right now we're looking at whether it's the Euro US dollar, the Australian dollar, Japanese yen. Both of these are into supports. They have the potential to hold. And if they do, this was a save and a butte. If we take out those swing lows, the last swing lows, there could be much, much further pressure down. This is a big level, by the way. Extend this trend line out. That one goes back to 2008, right? That's a big test down over there. And if we break down over here, this could start getting disorderly. It really could. Do I use wicks or candles or trend line? Les, I pay attention to what the market is paying attention to. I'll often start with the top of the wicks. But if I see that the market and price is paying attention to the bodies, I then adjust accordingly. Yeah, no, I mean, the last line of hopes, it could be smashing through. Pound euro. This has been for a while now. Just right. Boom. And it's unexciting. And there's no edge. Yeah. I don't know. Unless something disorderly occurred, I would assume that everything is waiting on Wednesday and the FOMC. That's a big deal. We continue to look towards, and we have, I love that video on the S&P 500. Will there be a V recovery? From the very beginning, we were looking at what we deemed to be signal. That was the expansion of the balance sheets of the Federal Reserve and the central banks. We were looking at the ECB at that particular time too. That's why Michael's thread over here, when he's getting into what it looks like and what our expectation should be for the further expansion of the Fed's balance sheet, is so important, right? So Michael, I'm going to spend a fair amount of time today going over this thread and making sure if there's any points that we want to share with the rest of the community to highlight those for sure. I think that's it for today, everyone. Have a beautiful day. Thanks for being here. And, any reason for the 1 day and not the 8 hour in the moment? Yeah, because I'm not looking for any trades. Hold on, Dean. I'm looking at the market, just trying to get a feel for the market. If you're looking for any trades right now, right? So let's talk about this on the Euro-Jap. We're looking at the Euro-Japanese yen. Let's talk about it, right? If that green dot over here, right? That was the entry, right? Stop loss is down here, right? Are you looking to sell this thing? I'm not looking to sell this, right? Euro Japanese yen, it's been in a strong uptrend. My thesis was that as the Fed began talking about setting up a taper, markets went into correction, right? And my belief the whole time is going to be, this is going to eventually go back and run this way. So if I'm looking to take trades, I would only be looking to take trades in that direction. Now, at any particular point in time, could you have set up potential shorts? You know, if you were looking to trade both sides of the market and you're looking at the 8-hour time frame, you know, not me. I wouldn't have been doing it. I'm only looking from the long side here against the Japanese yen. Now, if we break below that stop, what does that mean? Well, it means two things. It means that we could really dump, and we could dump down hard, but at the same time, at that point, you know, I'm just setting up the line and I'm waiting for the next opportunity for this to rebound. I think that's the direction we're going. How long it takes us to get there, let's continue watching this. But, you know, this is going to be a good video. I believe this is going to age very well and that we're going to be headed back that direction. So, Dean, the only reason is because I'm not looking for entries. I'm just trying to get a feel from afar of the market. But I don't believe it just warrants my attention right now. You know, good to get a look at it, but I want to focus over here on the Kion list. I don't even know how to pronounce that. All right. Tom, thank you. Everyone have a beautiful day. And we'll do it all again tomorrow. Of course, Noah, you want to look at the Australian dollar, New Zealand dollar. That has been going sideways forever. And then look at that. All right, let's look at this. This big box is that giant consolidation. Here was the triangle we drew since breaking down out of it. Boom. So what about this though, right? Coming down towards what is the potential buy zone of this huge consolidation pattern, getting towards the lower level. Support is support until it's broken. Nice to be able to manage your risk, right? I'm not sure what's going on over in the over with the Kiwis and in Australia or anything like that with the fundamentals, but you know, I wonder. The breakout of the triangle wound up being a good little guide, but I don't know. You know, it's still in this multi-year, 7-year consolidation in this range, and we're coming down towards the bottom end of that range, right? So it's a good place to manage your risk. You know clearly where you're going to be wrong. Yeah, we could look at the NASDAQ, of course. Right? But Joe, I don't know if you saw Friday session, right? Because in Friday session, and if you haven't seen it, Joe, go back and watch it. You could find in the announcements channel the link to last Friday's session. And, you know, we gave the clearest and a really good analysis of what's going on in the equity markets. Everyone was prepared, in my opinion. We had the breakdown of the NASDAQ occurring. Oh, sorry about that. Let me call it over here. Right? On the break of this line, everyone was prepared and watching. And on the S&P 500, we did the same thing, except we were coming up and we were testing the resistance. And I said, all right, I gave a little triangle. And I said, if we break down below that swing low and resume down, it should be really quick right into that next line of support. Everyone should have that clarity. Dean, I think you get much more out of, instead of me giving you an analysis right now, which is that, well, we're in correction and we don't have any lines of repairs to come out. We just hit major sell impulses on both the S&P 500 and the NASDAQ. I think that going back to Friday before all that happened and looking as how we looked at that, it's around the 8-minute mark on Friday's video. I think that you'll be better off watching that. All right. Okay. Would you advise against looking at the daily for analysis and the 8-hour for entry? It's always strong, Dean. Absolutely. If you're just coming in, Dean, if you're watching the currency markets every day, then stay on the 8-hour for sure. If you're coming into it cold and you haven't been looking at the charts, definitely start on the daily, get that picture, that clearer view, and then go down to the 8-hour. All right. So if you're looking at the markets every day, there's no need to go to the daily. You could just stay on the 8-hour. That's the view that you want. All right, everyone. We love it, Michael. We love it so much. All right, everyone. May God bless you. I'll see you all tomorrow. We're going to do it again. Until then, stay safe and have a beautiful day. Thank you, Jake. All right, everyone. Have a beautiful day. I'll see you tomorrow.